All right, well, let's welcome our first guest on the show. We have Brandt, Director of Research at EPER Global, who joins us on the show. Hi, Cameron. Thanks so much for joining in. Well, a month or so ago, you had joined us and you were telling us there's definitely more amount of interest for the Indian stock market. Could you tell us how things have changed in the last 1 month or so? We are calling for a higher share of the total emerging market flows. Do you think that's likely to be the case?
I think that is still the case. Since we last spoke, there have been steady, if not spectacular, flows into dedicated India funds. And India funds have been really second in the emerging markets universe after China in terms of attracting fresh money. And so certainly, I continue to think that that's a likely trend. As I'm sure you're aware, many of the forecasts in the developed world, especially Europe, for the end of the year into next, make somewhat gloomy reading. So a large market with a strong domestic demand story and the promise of 7% growth is very attractive at the moment.
Cameron, hi, good morning. But, is this being driven by ETFs? Because that can change on a dime, like we saw earlier as well.
Yeah, not completely. There's been a reasonable amount of money coming through the mutual fund channels. I tend to view the numbers in late August with a certain degree of caution. It is, even in these somewhat uncertain times, the summer holiday season here in the Northern Hemisphere. A lot of flows and trading activity is a little thinner than it usually is. But the interest in India has held steady, and the big diversified funds continue to have to find alternatives to their Russian exposure, and India has certainly been capturing some of that money.
But a large chunk of the FI money that has come into India has come via emerging market funds, and within that, India has received a larger share. Do you think that's a trend that can continue, or do you see other markets as a bit more attractive compared to India for the rest of the year?
Depending on how Brazil's election plays out and what emerges from the Chinese Communist Party's Congress at some point in the fourth quarter, those markets could certainly regain some of their luster. But I don't see much competition at the moment from any of what you might call the second-tier markets. And I think until those waypoints in Brazil and China are passed, that India is likely to see pretty steady interest from the gem fund managers.
All right, Cameron, what about, since China is in such a flux, are you seeing, cutting down of exposure to China? Because the next action could be then the flows come to India. Are you witnessing that?
We certainly saw the gem funds fairly aggressively cut their exposure to China towards the end of last year and into this one, though that reduction in exposure has plateaued a little bit. What has been interesting has been the persistence of institutional flows into dedicated China funds, nearly $3 billion last week. So there's clearly a reluctance to sort of give up on the China story, and a feeling that there, especially with this correction, there's now some value in that market.
If you look at the plate on the screen, I don't know if you can see it right now, but there is a weightage as per a country or economy given in most of the large dedicated funds. And Europe and, West Asia is still high at about 8%, but Europe has come down substantially. There are a lot of challenges that we're seeing in the European markets as well, whether it's escalating gas prices, the whole power crisis situation over there. Do you think because of the challenges that we're seeing, not just in Europe, some parts of North America as well, outsized flows could now move into markets like India and China?
I certainly think that people, when they come back in September, are quite likely to make some more aggressive bets. Chairman Powell's promise of pain at the Davos summit has not gone down particularly well with mutual fund investors who have a developed markets focus. On the other hand, so many of the variables that we track and focus on could go in a number of directions that I think it's a little early to say there's going to be a large move to emerging markets. But emerging markets are certainly holding up better than I thought they would earlier this year. The big ones, India, China, and Brazil. Russia is out of play at the moment, but even Korea. I'm certainly seeing interest that is more often than not positive week to week.